Hello, my name is Edmond Jamna, and on behalf of DW Consult, I want to welcome you to Tutorials on the Go. Our zeal here is to help transition people with zero, struggling, or shaky base in accounting to an expert position and to a place of confidence. It is also a platform to assist in the smooth studying of the ACCA and ICA professional qualifications, as well as for any tertiary accounting discipline. All that is required of you is to subscribe to our channel and click on the notification bell as well to be part of the program. Tutorials on the Go, bringing accounting to heart. Now, to this episode's lecture. Control account. Bank reconciliation statement is a method of checking the accuracy of the entry of transactions concerning cash in and cash out of the bank. However, a great many of the transactions of a company involve purchases and sales on credit. Now, it is important to have a way of checking the accuracy of these transactions also. Now, a journal is a detailed account that records all the financial transactions of a business to be used for the transfer into ledgers. Now, a journal states the date of a transaction, the account affected, the amount, usually in the double entry bookkeeping method. Now, this is done usually in words rather than in a T account. So for journals, we have it for every transaction that happens. So we have for sales journal, we have a purchases journal, we can have a cash receipt journal, cash payment journal. We can also have receivables, payables, and what have you. So the format is stated as below. So we write the debit entry first, followed by the credit entry on the next line. Then we write below the entry a brief description or a brief narration of giving flesh to the transaction that transpired. So let's test our understanding. Now, a business purchases goods for resale from AJ for $25,000 on credit. Now write down the journal entry for this transaction. So for the solution, we debit purchases, which is an expense. Then we credit payable. Then the narration will be purchase of goods on credit. Control account. When a sale is made on credit, it will be first recorded in the receivables journal. The transaction will then be moved from the journal and recorded in the account of the individual receivables. Then the total of the individual receivables ledger is posted to the total receivables ledger in the nominal ledger. Now, when the sale is made and cash is received from the customer, the amount is first listed in the cash receipts journal. The amount of the receipts is now taken from the cash receipt book or journal and entered into the account of the relevant customer in the receivables ledger. Then the total of the cash receipt book is now posted in the nominal ledger. Now, the total receivables account in the nominal ledger is what is termed as the receivables control account. So the receivables control account captures all the individual receivable ledger. Now, the same is made for a purchase. So when a purchase is made on credit, the invoice is listed in the payables journal. The transaction is then taken from the journal and recorded in the account of the individual payable. Now, the total of the individual payable ledger is posted to the total payable ledger in the nominal ledger. Again, when the cash is paid to the payable, the amount is listed in the cash payment journal. So the amount is taken from the cash payment journal and entered in the account of the relevant payable in the payable ledger. The total of the cash payment journal is posted to the nominal ledger. Now let's look at other items that will affect receivables and payables. The first of which is a returns. A return is a sale or purchases made on credit which is returned by the receivables, that is if it's a sales, and the payables if it is a purchases. Now this has to be adjusted in the individual receivables and payables account and consequently the control account. Discount. So this is an opportunity availed to or from the receivable or payable to pay lesser than we or they owe respectively. Contra has to do with one client which we have bought from and sold to. So we use the amount that they owe us to offset the amount we owe them. So here, the control account helps to detect and fix errors from the credit sales and credit purchases in that the individual ledgers, the total of them, should be the same as the total of the control account. If it differs, it means there is an error present which should be unearthed and rectified. So let's look at the pro forma for the receivables ledger control account. So we debit it with the balance brought forward because the receivable is an asset account. We debit it with the sales for the period, which will be picked from the sales day book. So if there's an annual check, refund to credit balance, interest charge when the amount they owe is overdue and we decide to charge interest on it. When we move to the credit side, we see a balance brought forward. This is when they had overpaid for a particular period, which we bring to the current period. Sales returns is credited here. Payment received, this is normally picked from the cash book. Recoverable debt. So when a debt is deemed not to be payable, discount allowed, contra, we credit it here. Then we close it out. We now move to the payable ledger control account pro forma. We will now start with the debit side. We have a balance brought forward. That is where we have overpaid on our balance. So when the payment is made to the payables, it is debited, which will be gleaned from the cash book. Purchases return is debited here. We can find out from the purchases return journal. Discount received, contra, is debited here. It was credited on the receivables ledger. We move to the credit side. We have balance brought forward, which is the normal side to hold the balance for the payables ledger. When we have credit purchases, then refund to debit balance. Now when we close the account and the difference arises, let's not test our understanding. Now, EA company proves the accuracy of its receivables and payables ledger by preparing monthly control accounts. At 1st September 2019, the following balances existed in the company's accounting records and the control account agreed. Okay, so the receivables ledger control account had an opening balance of 186,220. The payables also had an opening balance of 89,290. So the receivables is a debit and the payables is a credit. Kindly take note of that. Now the following are the totals of transactions which took place during September 2019 as extracted from the company's record. So you have credit sales, credit purchases, sales return, purchases return, cash received from customers, cash paid to suppliers, cash discount received, irrecoverable debts written off, refund to customers, contra settlement. So we are then to prepare the receivables ledger control account and payables ledger control account, which is the totals account for the month of September 2019. We move straight to the solution. So when we open the receivables ledger control account, the balance was a debit. So we bring the 186,220 here. There was a credit sale. So we bring it here, 101,260. We bring the refund to customers, the $300. We move to the credit side. Cash received, that is 92,700. Sales returns, 9,160. Irrecoverable debts, 460. Contra settlement, 480. The same figure will be debited to the payables ledger control account. Okay. So when we close the account, it's going to be 287,780, which is the total for the debit side. So it's going to bring a balance to the credit side of 184,980. We bring it to the debit side and put it there. So as a check, the total for the individual ledgers in the receivables ledger should sum up to 184,980. If not, there is or there are errors which should be unearthed and rectified. When we move to the payables ledger control account, the balance was credited. So we bring it here, 89,290. There were credit purchases to the tune of 68,420. Then there were payments made of 71,840. We debit it. Purchases return is also debited here. Discount received is debited. Then the contra, which was in the receivables ledger control account, is here. When we try the total, it's going to be 157,710, which is that of the credit side, which will throw the balance to the debit side of 80,230, which will be brought as balance brought down to the credit side. Now again, this should sum up to the individual payables in the payable ledger. Let's come to control account reconciliation. The balance on the receivables ledger control account should equal or sum up to the total of the list of balances in the receivables ledger. And similarly, the balance on the payables ledger control account should equal the total of the list of balances in the payables ledger. If the two are not equal, then there must be an error or errors either in the control account or in the ledger. Let's test our understanding with the reconciliation. So at the end of the year, the balance on the receivables ledger control account of Mami Limited was $26,100. However, a list of balances extracted from the receivables ledger total $25,500. So there is a difference. On investigation, the following errors were discovered. A balance of $1,200 owing from Alex had been omitted from the list of balances. The total of the sales journal, that is the sales day book, had been overcast by $1,000. The sales journal is purposely used to make entries into the control account. So it means that the list of individual ledgers were not affected. No record had been made anywhere of a contract with payables of $100. Now, a credit balance of $800 in the receivables ledger had been listed as though it was a debit balance. So we have to determine the correct figure for the total receivables at the end of the year and reconcile with the total of the list of balances. So for the solution, we deal with the list of balances of the receivables first. So we bring the opening balance, which is the $25,500. Then the Alexis omitted balance, we add it. The contract that was missed out, we bring the $100 here. Then the balance of $800, it was supposed to be a credit balance. to reduce the balance on the receivables, but it was debited, meaning it increased the amount that we believe was owed to us. So to correct it, we first deduct the 800 to offset the error that was done. Then we now record the 800 again, reinstate the 800 that was supposed to have been credited, giving a corrected balance of $25,000. When we come to the receivables ledger control account, we start with the opening balance, which is the $26,100. The overcast in the sales journal, as I said earlier, $1,000. The contra, which is seen in the list of balances, of $100 is now brought here, which also gives a corrected balance of $25,000. Now we've been able to work out for the two accounts to agree, meaning that the errors have been rectified now. So guys, this is all we have to discuss on the control account. If you have any questions, feel free to drop them in the comment section below. Also, kindly click on the red button below to subscribe. Click on the notification bell, like and share. So we come to you again by way of tutorials on the go. Take care of yourself and stay blessed. Poker.